To all my listeners, whether you're a gold bug or you're concerned about inflation and protecting your capital, you need to check out my brand new conversation with Dan Ferris on the Stansberry Investor Hour podcast out now. You can easily access the episode by clicking the link in this video description box. Hope to see you there. Hi, this is Daniela Cambone, and welcome back to Stansberry Research. Well, you have been asking for more Gareth Soloway, so here he is back again to talk Bitcoin, Ethereum, Cardano, his thoughts on stocks, and gold, of course. Gareth, good to see you. Welcome back.
Hey, thank you, Daniela, for having me back. It is always a pleasure to talk to you.
Always a pleasure as well, Gareth. And obviously, no shortage of volatility here. Things are moving so quickly, can change within an hour here. But the last time you were on, obviously, you made headlines for your very, what people would say bearish calls on Bitcoin. You called for a Bitcoin winter, saying you could see the crypto fall to 20,000. And just when you thought 20,000 might sound bearish, I was reading a recent report from Stifel earlier this week, and one of their analysts, Barry Bannister, says Bitcoin could plummet 76% from current levels to $10,000 by 2023. And he highlighted global money supply, the 10-year US Treasury yield, and the planned tightening by the Federal Reserve as just some of the obstacles that could be in Bitcoin's way. So my first question to you is, are you sticking to a $20,000 call for Bitcoin, or have you become a little bit more bullish or bearish?
So for me, it's 20,000 is my high end target for sure. I do think it can go a little bit lower. I agree with Stifel in terms of, if you look at past corrections or bear markets in Bitcoin, it's an 80% drop. And if you take the 69,000 high and take away 80%, you're basically at 10,000. So I understand where they're coming from in terms of that. And I agree that, we're in an unprecedented period that we haven't seen for 20, 30, 40 years, where inflation is now an issue and the governments around the globe are going to have to start taking away money from the system instead of pumping it in. And that's going to have an impact. I mean, I've looked at some of these stocks out there like Roblox and Roku. I mean, Roku's down from $500 a share to like $100 a share. I mean, that's a massive decline. And Bitcoin kind of is a risk on asset. So it's treated like a tech stock. So very likely you will see further downside. I'll start nibbling on a longer term entry for Bitcoin when it gets to 20, and then I'll just kind of keep buying all the way down.
So if you don't mind just sharing one of your charts now
Yep.
on Bitcoin, just so you can kind of walk us through what to do here, because you have said, sorry, Bitcoin bulls, you don't see 100,000 this year, which is what a lot of people are hoping for.
No, I mean, last year it was going to be 100,000. This year now they're trying to scrape it out and just throw it out there. I just don't see it. I mean, unless for some reason something happens where monetary supply all of a sudden starts to increase. That's the bull case for Bitcoin, the bull case for tech stocks. And at this point, all we see is worse headline inflation numbers, right? So, I mean, if all of a sudden inflation went back to 2%, and we got into a recession, yeah, then I think that is a possibility. But I just do not see it, not with PPI numbers coming out recently near 10%. And just looking at the chart, Bitcoin's behaving very much like a chart should. All right. So you had this beautiful parallel trend line, this white line down here, matching perfectly with this one up here. Price came down to it. You got the technical bounce. And then look at this kind of head and shoulder pattern right here. You went right back to that neckline before starting to roll over again. So on a technical basis, there's 2 points I'm watching on the chart in the near term. This one right here, this orange one, if we break above it, you have potential for upside to 50 to 52,000, the midpoint. If you break below the white line, that's where you start heading down into the 20,000 range. At first you'll have support at this low over here around 27, 28,000, 29,000, but very quickly, I do think you could get down to the previous all-time high back in 2017, which is right around that 20,000 level. So, I mean, it's one of those things where if you're an investor in Bitcoin, you have to take a longer term view if you're going to stick with it, because certainly what's going on in the macro economy, what's going on with inflation is just not bullish for crypto or Bitcoin.
Okay, so does that disprove the thesis of many that came out saying Bitcoin's going to be, the greatest tool in your toolbox against the fight against inflation, and is gold beating it here?
Yeah, so you know that I've called for the best performer between Bitcoin, the stock market, and gold to be gold in 2022. So far, so good, right? I mean, gold has had a beautiful breakout. In fact, let's jump into the chart on gold and
Please.
take a quick look here. See what we got. You can see again, we had this wedge pattern. In fact, I think last time I was on, we discussed this wedge pattern,
Yes.
and we have seen a breakout now. And again, that's coming with the unnerving kind of issues with Russia and Ukraine and all these other things. But it's also now you're seeing the pattern playing out. So you guys know I'm a big technician in terms of the charts, and I've talked about how this move up was 2 years. This consolidation is approaching 2 years, and it's bullish consolidation. Here's your breakout. And then the last thing, I love to show this chart. It's such an important chart for investors to understand. Go back to your 1970s to 1980s chart on gold. And what you can see here is that it's replicating exactly what we saw back in the 70s. So from like 72 to 74, you had the big move. That's the equivalent of 2018 to 2020. We then went into kind of a consolidation pattern for a couple of years. And then this is what I think is now beginning on gold, this massive move up. Now, back then it was $100 to 900. I don't really expect that type of percentage move, but I do think, again, seeing a 3,000 handle on gold, maybe even by year end is a possibility. And then maybe even 5,000 within a couple years on gold. So again, gold to me is the safe play. I know a lot of people want Bitcoin to be that play where you kind of say, okay, Bitcoin will protect us against inflation. It will in 5 or 10 years, I believe, not right now. Bitcoin is a risk asset. It's going to get treated like a risk asset until it gets more investors and calms down.
Gotcha. So, would you be a buyer of gold here if you're thinking it's going to 3,000, 5,000?
Yeah, if you don't have any exposure at this point, I do think you put some in your portfolio. Maybe not crazy, 5-10% of your portfolio should be in the metals. You can spread it around a little bit too. I'm not as big a bull on silver, mainly because you have the industrial side where if the Fed does what I think they're going to do and raises interest rates multiple times this year, it's going to slow the economy. So then you have to worry about the demand for silver for industrial production and batteries of electric cars and so forth. But ultimately, spread it around, be exposed to metals. That's going to be your best way to protect yourself against inflation. Bitcoin gets sub 20,000. That's where I start to buy as a hedge. And I think it has a hugely upside move in the
Oh,
future.
okay. You beat me to it. I was going to ask you what would it take for you to step in and be a buyer
Yeah.
of Bitcoin sub 20,000 for you
Yeah,
here.
20,000, like, and the way I invest is I always am humble enough because I've unfortunately learned my lessons in my early career the rough way by losing a ton of money. So what I do is I usually will put out an order at 20,000 or just sub 20,000, and then I'll do another one at 15 and another one at 12 and another one. I don't go all in at one spot because I've learned my lesson that I've been wrong too many times, and it's better to kind of, dollar cost average in.